Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Happy New Week to you all, and I do hope you had a fantastic weekend out there. Well, for me, it was quite okay and very short as usual, and I do hope you have the same experience too as well. Today is the first edition for the Forex Morning Mastery for this week, and of course, we are going to be looking at three financial assets as usual. And during the course of the weekend, I shared a poll on both my trading view, sorry, on my Telegram and YouTube channel, where I projected two assets, that is the GBP USD and the USDJPY, that we choose one out of the two, and the result came in favor of the Japanese yen. So in that regard, we're going to be taking on the Japanese yen, dropping the GBP USD for this week. So in that regard, we are going to be looking at three financial assets today, which includes the US All Spot, the USDJPY, and of course my favorite asset amongst them all, the XAUUSD, popularly known as the gold spot. And in preparation for this week, I have been able to identify simple trading setups that we are going to be using to navigate the current market dynamics. Well, we cannot continue into the new week without even talking about what happened last week, as last week happens to be one of the most profitable week for us for this year, as we did capitalize on both the weakness of the US dollar and the rebound of the same asset too, as well, especially on the gold. We saw opportunities on the GBP USD, and of course, we were able to capitalize on some significant profits on the US All Spot as well. And in that regard, I want to appreciate every single one of you who did capitalize on this opportunity and, of course, stayed faithful with our analytical approach. So, once again, congratulations to all of you who are part of last week's profitable journey. So, as we head into the new week, we are going to be looking forward to see if we can replicate the experience we had last week. Remember, last week did not start with last week started with an indecisive fate. It was more of an extended range bound structure most of Monday, Tuesday, Wednesday of last week, before we finally started gaining some traction following the FOMC announcement. And this week as well is laced with a couple of high impactful events, especially from the United States, where we will be looking at the GDP and, of course, the core personal consumption expenditure, which is considered to be an inflationary gauge, which the Fed will be looking forward to see how it may probably impact the path of their interest rate cuts for this year. So we are going to be looking at a lot of things today and taking into consideration these fundamental factors. And in that regard, I would like you to stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. So during the weekend, I was able to share only the XAUUSD analysis due to the limited time I had. But today we will be doing a top-down analysis on the US All Spot and the USDJPY before we go into the lower time frame where we shall be making our decision. So I encourage us all to stay tuned in. Now, for those of you who are joining us for the first time, I know you will be wondering, what is this all about and what is it that we really do here? Well, first of all, my own name is Sheriff Daramola, and I am here to equip you with the knowledge and skills necessary to make informed trading decision independently. In as much as this is not a signal service platform, what we do here is to try and see, using the historical data on the chart, to identify potential opportunity, and of course use it to strategically position ourselves for the next move. And the more time you spend with us in this community, the better you get to understand our analytical approach, which eventually will help you to enhance your own trading decisions and strategies. And the Forex Morning Mastery now happens 3 times in a week: Mondays, Wednesdays, and Friday, where we come to review and assess the performance of our trades and see how we can manage them as well, and of course position ourselves for the next move. So once again, I do extend a warm welcome to you and encourage you to actively engage in the comment section. I see you, Umejesi Kelechi. Kelechi, has been a very long time. How are you doing today? Glad to have you around with us this morning. Trust you're doing very well and your family. All right, so with that being said, here as usual, we will be diving right into the business, and it is our practice in this community that we keep tabs with the fundamental factors that are likely going to be influencing the market sentiment for today and of course for this week. And to do this, we usually turn into the economic calendar, where we have come to understand that these fundamental factors often manifest on the chart in technical patterns and price movement. So by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and, most importantly, timing to position ourselves in such a way that we can capitalize on any potential move prior, during, or even after this economic event. Now, based on these assets we are looking at for this week, that is, we will be focusing on economic features from both the United States and the Japanese economic docket. So usually we focus on high impactful event due to the volatility that comes with this event, but in the absence of this, in days which has absence of this event, we usually include mid-tier economic features. So for today, while trying to turn into the calendar, what I did here was to include both the mid-tier economic features and of course the high impactful event, and look at what we have here. So we already have the Bank of Japan monetary policy meeting, which happened very much earlier today. That was during the Asian session, and of course there has been quite some hawkish remarks by the Bank of Japan following the release of the minute, where it did emphasize that inflation is gradually winding down, and this is good signs for buyers of the safe haven Japanese yen, as if this is going in line with the projection of the Bank of Japan, then the chances that they will be pivoting from their ultra loose monetary policy is very likely. And if you remember vividly, when we were analyzing the USDJPY, I think last month, we did talked about the potential of pivoting as early as the month of March/April. So the match is still going on. We yet to see that, and we also had this warning from one of the top policymakers in Japan. I can't remember his name, but if I do, I will let you know, where he emphasized that the Bank of Japan may likely intervene in the FX market due to the decline in the value of the Japanese yen. And this, of course, has incited some indecision in the market today. So we will be looking at how we will be navigating that market dynamics today. And moving forward, today, Monday, March 25, we are going to be looking at a series of mid-tier economic features from the United States, and one of which is the Fed Bostic speech, which is coming up in about 4 hours 25 minutes from now. And Bostic is considered to be the Federal Reserve Bank of Atlanta's president, and is also a member of the FOMC, and whatever he says today will be giving us an insight into the economic outlook of the Federal Reserve, and of course the health situation of the United States too as well, which will give market participants an insight into how resilient the US economy is. In fact, the US economy has been very, very resilient in the last couple of months, so we want to be seeing what it will be saying. Then we also have Cook's speech too as well, which will be coming up in about 7 hours from now. She is a member of the Board of Governors of the Federal Reserve, and she's also a research associate in the National Bureau of Economic Statistics. So everyone will be looking forward to what she is going to be saying too as well. Then amongst these two speeches is the new home sales report, which is usually released by the US Census Bureau, and is considered to be an important measure of housing market conditions. So and we know how sensitive the housing sector is to the United States. So generally, if the reading comes out a little bit higher than expected or beyond the previous month data, we may likely see a positive traction in favor of the US dollar today, while a low reading obviously will be giving us a negative traction. So looking at the data for the previous month, that is for January, it came in at 1.5% expansion, though we do not have any projection by economists, but usually we may be seeing that happen maybe an hour or two before the event happens. So we will look forward to see what the actual data is going to be on the new home sales change, and let's see if that sector is expanding. In fact, the report that came in from the housing sector last week was tremendously okay. In fact, it reveals an LD sector. So we're going to look forward to see what the actual data will be on that one. And as technical traders, we do understand that the anticipation of this event has a way of influencing the way market participants will behave ahead of this event. And of course, with this understanding in mind, we do want to be sniffing through the current market dynamics via the chart to look out for patterns and structures that we can actually use to guide our trading decisions for today, or at least for the first half of this week. So with that being said, here we will be diving right into the business. I see you, John Alabi. Good morning to you, and glad to have you around with us this morning. Sorry, please give me a moment, please, before we kickstart. I want to attend to my little boy behind the scenes. Thank you very much. I'll be back soon. All right, so sorry, I'm back again. Okay, so the next asset we are going to be looking at this morning is going to be the US All Sport. And on the US All Sport, we had an interesting week last week. Remember, we had roller coasters of buys and sells, and then during the end of last week, we also had the privilege of capitalizing on a potential reversal pattern, if you remember vividly. And as it is right now, the market appears to be going through a consolidation phase since last week Friday, which has further emphasized the prevailing uncertainty in the market right now. And in fact, there has been various factors behind the scenes which has been influencing the way market participants are thinking at this point. And one of the things we were able to come up with last week, one of them is the publication from the International Energy Agency IEA, which projected a significant reduce in global oil production for the remainder of 2024 following the announcement of OPEC Plus members extending voluntary production cuts into the second quarter of this year. Now, this anticipated drawdown on stockpiles throughout this development, that is the cut in oil production by OPEC Plus members into the second quarter of this year, is anticipated to draw down on oil reserves, oil stockpile for the remainder of this year. Now, additionally, escalating geopolitical tensions in the Middle East, evidenced by numerous ships rerouting to avoid the Red Sea, which of course escalated the prices by elongating the journey. So, and of course inflating costs too as well. And a couple of weeks ago, was it last week or a couple of weeks ago, I think, we had of the in the Ukraine military striking Russian refineries, eating over about 10% of the total of Russian refineries, which obviously, considering how strong, how influential the Russian oil supply is to the global market, we know this could cause some dent into the supply, which will hereby increase demand for oil, further pushing price to the upside. However, if we look at the weaker economic growth in major economies, this could dampen oil demand, hereby exerting pressure on these prices. Remember, last week we saw the Federal Reserve opted to maintain its interest rate at 5.25 to 5.50%. And this is a very hawkish stance, and the expectation of higher for longer interest rate may potentially limit the upside of the US oil, due to the fact that the cost of oil might become more expensive as the dollar will continue to rise due to the higher for longer interest rate. And when the dollar rises, it becomes very expensive, considering the fact that the US All Spot is a US dollar denominated asset. So if the dollar rises in value, then it becomes very expensive for other currencies to buy the US dollar before they can actually buy the US All Spot. So, and this could potentially limit the demand for oil too for this week. So we are going to be looking at the current market structure in the moment to see how the market participants have been behaving within this balance of potential uptrend situation, and of course the limiting factor that could cap the ascent of oil prices. Now, to analyze this market, I started my analysis on the 4 hours time frame, where we do want to be having an holistic perspective into what is really going on in this market. And if you look at the structure, what I did here was to take into consideration the character of price action since the second half of the month of February. That's an historical data of about 5 to 6 weeks thereabout. And what I was able to come up with here is the fact that price action has been very, very bullish, and this is very evident when you look at the series of higher lows on this chart. Look at what we have here. After connecting the series of higher lows, I have this temporary bullish trend line, and then we have the major ascending trend line right here. Now you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we want to be looking out for patterns and structures that supports the idea of buying the asset. And the only condition that will make us sell is for this ascending trend line to be broken to the downside. Now, besides these ascending trend lines, here are a couple of levels which I was able to project on this chart. In fact, we have three levels here. One of them which captures the breakout of the $80 level for the first time, a successful breakout of the $80 level for the first time this year, as you will see here. And then the other level emphasize the highest point price action has been for this year, which is at the $83 level. And then finally is our key level for this week, which is around the $81 area. Now look at the $81 area, which is where our center of focus will be for this week. This level here had played a significant role in determining the direction of price action in the last couple of weeks. Now, you know how we use our key levels in this community. As long as price remains below the key level, we want to be looking out for patterns and structures that supports the idea of selling, and we are not going to be buying unless price action climbs up above the key level. Now, if you look at what is going on right now following last week's trading activity, you will see that price action broke down that $81 level, which interestingly shares a beautiful confluence with that ascending trend line we identified earlier. Now, with a breakdown of the ascending trend line, it is technically believed that price action will continue to the downside. So a breakdown retest of structure may confirm selling opportunities at this point. Now, price now remaining below the $81 area further supports the idea of looking out for selling opportunity. And if price continues to drop in such a way that it breaks down both the second ascending trend line, which also shares a confluence with that $80 level, it could welcome more selling opportunities. But at this point, well, if you look at the distance between where price action is now and this level, we are looking at about 70 pips thereabout. So what I will do here is, though things are looking bearish at this point, but we will exercise patience. When price gets into the $80 mark, we move our stop losses, secure the current sell position, and see if price will go ahead to break down the structure. If it does, we are ready to sell. And then if we begin to see buy pressure here, then price may likely be respecting the ascending trend line one more time to continue the uptrend move. Now, to capitalize on trading opportunities here, we want to see how market participants have been reacting to that $81 level, which happens to be our key level for this week, to decide what our next line of action will be. And to do this, we will want to scale down into our execution time frame, which is the 1 hour time frame. And right here on the 1 hour time frame, after monitoring how market participants has been behaving since the new week began, I was able to find a simple structure to guide our decisions for today. Though the week started on a strong bullish note, as you will see here, price action started around the $80.70 level, making it our first support line for the week, rose into the $81.13 level after breaking out of our key level. But as soon as price got into the structure, we saw selling pressure resume again, making it a barrier for buyers to continue the momentum, dropping price back into the structure. Now, as a result of this dynamic, we have a range bound structure where price action is currently confined within the $81.13 level and the $80.70 area to emphasize the prevailing uncertainty in the market at this point in time. And you know how we do it in this community. Whenever price action falls into a range bound structure like this, we want to exercise patience, waiting for price market participants to make that final decision of where they want to be going today, which obviously will reflect on the chart as either a breakout of the resistance line for buying opportunity. As you will see, if price breaks out of the resistance line, price will already be above our key level, welcoming buying ideas. However, if price drops below the support line of that range, then we will be looking out for selling opportunity. And as it is right now, it appears that the momentum towards the downside is looking very, very promising, especially after seeing the way price action has been rejecting that area around the $81 and the $81.13 level, making it a resistant line and a supply zone, at least for the meantime. So as a result of this, we do want to be having our sell stop order right below the $80.70 area to capitalize on this bearish move. And as we continue to monitor price action, as soon as price drops close to the $80 mark or the ascending trend line we identified on the higher time frame, we move all our stop losses, secure the current sell position while we wait patiently to see how the market is going to be reacting to this confluence right here. Now, if we see buy pressure or the emergence of a reversal pattern, it could come in the form of a double bottom structure, head and shoulder, or even a falling wedge. Well, a breakout of the neckline of that pattern will be all we need to continue the uptrend move. However, if price breaks down and retests the structure, then we are going to be adding more sell positions to our existing trade. So that is how we are going to be managing our position if price action breaks down the support line of that range bound structure we identified this morning. However, in as much as things are looking a little bit more bearish, we cannot ignore the potentials of buyers. We did talk about the fundamentals here earlier, where we talked about the geopolitical tensions in the Middle East. We talked about the attack on Russian vessels. We talked about the IEA new projection as regards to oil production for the later part of the year. And we also talked about the OPEC Plus members extending their production cuts into the second quarter of this year, which could probably incite an uptrend situation in this market. But we do not know when the uptrend will happen. Is it going to happen right from the $80 mark when price gets into that area, or is it going to start all the way at the breakout of the resistance line of this range? So in that regard, we will be having a buy stop order above the $81.13 level to capitalize on the buying opportunity from this point in time. But trust me, I will be with you in the comment section to give you updates on both my trading view and Telegram platform as I continue to monitor price action around this current structure. So I do encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. And if you have any questions whatsoever as regards to this current setup, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off to see if there are any questions, while you also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. And don't forget to give the video a like, give it a thumbs up. Your likes are very valuable to me and helps the algorithm push the video to a wider audience of traders who may find the content beneficial. So we have over 9 people on board. Let's make the like tally with the number of people on board, and thank you very much as you do so. So see you in about 15 seconds from now. All right. So I see you, Torres Master. Good morning to you. Glad to have you around with us this morning. Trust you had a wonderful weekend out there. So, in the absence of no questions, I want to assume that we are all on the same page. So, in that regard, we shall be moving on to the next asset on our watch list. So the next asset we are going to be looking at this morning is going to be the USDJPY. And the last time we traded the USDJPY was about 4 or 5 weeks ago. We dropped it at a point after we saw a choppy market conditions where our entries, price action keeps snapping back into our entries at every point in time, and this led to some indecisive phase around there. So we decided to drop it and started trading the GBP USD in the last 4 weeks. Then last week we saw a handful of viewers saying that we should revisit the USDJPY. So I drew out a poll during the weekend for us to vote for which asset we want to be looking forward to this week, and obviously the polls came in favor of the USDJPY. So I hope I was fair enough on that one. So here on the USDJPY, since the inception of the new trading week, we have seen a situation where the Japanese yen has sustained some notable buying pressure, especially during the Asian session, amidst concerns over Japan's potential intervention in the foreign exchange market. And this triggered the currency pairs surge to, after we saw a surge last week to a year-to-date high of about 151.800 area. That was last week. Then some of the factors that may be affecting this asset this week is the hawkish tone observed by the Bank of Japan's January minute that was published this morning, which obviously appears to have contributed to the downtrend in the USDJPY this morning. Now, in the minutes, it was disclosed that the Bank of Japan's board member have recognized a growing probability of achieving the central bank's inflation target as inflation gradually reduces its pace in the last couple of months. Furthermore, there have been deliberation among members revolved around potential measures to be taken if a positive correlation between wages and inflation is confirmed. So some policymakers acknowledge a reduction in the risk inflation surpassing all expectation, and these all are all good news for buyers of Japanese yen at this point, as if things continues like this, we may likely be seeing the price of Japanese yen rise due to the increase in the possibility of the Bank of Japan's pivoting from their current ultra loose monetary policies. Now, in light of this recent development, the Japanese yen could find support from the possibility of forex intervention. Masato Kanda, the name I was trying to remember earlier, who is a significant policymaker in the Bank of Japan's administration, issued a cautionary statement indicating readiness to implement appropriate measures to counter excessive weakness in the Japanese yen. And this, for me, may begin to incite some level of fear amongst market participants at this juncture, especially price action is currently at an all-time high, at least for this year, and we may likely want to be seeing some profit-taking activity due to this whole situation. So we are going to be taking the possibilities of sellers too as well, while we also consider the possibilities of this trend to continue to the upside. So to start our analysis for this week, we will be looking at the daily time frame, for instance, and looking at this chart, you will see that price action appears to be at a very strong high right now around the 151.900 area. So what I did on the 1 hour time frame was to take into consideration the character of price action since last year September, and when I did that correctly, well, it's obvious that price has been bullish since the month of December of this year. As you will see, price had consistently found higher lows and higher highs through the last 4, 5, 6 months, as you will see here. However, as soon as price got into that same 151.750 level, we saw the resumption, the reemergence of sellers around this area. And in fact, this level has a peculiarity for seller niche in the past. As you will see, in the month of November of last year, we saw how sellers took over the market as soon as price got into that area. And then fast forward to last week, we saw price action come back into that zone, and in fact buyers have been finding it difficult to break through that area. Now the question as we head into the new week is to see how the market is. The question going into the new week is the selling pressure going to persist here in such a way that it will bring price back into either the ascending trend line or the 149.00 level in an anticipation of an uptrend continuation, or probably even break this round the structure to incite a sell-off one more time. And the third view is an outright breakout of that 151.750 to incite an uptrend continuation. So as a result of this perspective we see on this chart, the 151.750 will be serving as our key level for this week. So you know how we use our key levels. Of course, when price remains below the key level, we will be looking out for patterns and structures that supports the idea of selling, and we will not be buying unless the key level is breached and broken to the upside. So with this observation now, what we are going to be doing is to scale down into a much more lower time frame, where we shall be looking at how market participants have been reacting to this current structure. Now, to guide our trading decisions for this week, I have a simple trading setup on the 4 hours time frame. Now, on the 4 hours time frame, this is what I was able to come up with after looking at the current market dynamics in the last couple of weeks or so. And you can see it is very obvious that the market has been bullish since the second week of this month, and we have an ascending trend line to buttress this fact. Now, as soon as price tested that new high, we saw price action go into a consolidation phase right here. Oh, sorry, I had to use, the 151.750 is our resistance line, and our key level for this week is the 151.200. Sorry about that, I didn't correct myself on the daily time frame. So the key level for this week is the 151.200. So I encourage us to mark out this level on our chart, as a breakdown of this level will definitely welcome selling opportunities for us. And look at how beautiful the key level shares a confluence with that ascending trend line we have here, which has been supporting that bullish momentum since the second week of this month. So if price action breaks down the structure today or this week, then it will make a lot of sense for us to look out for selling opportunities. So in that regards, we shall be scaling down into the 1 hour time frame so we can see how the market is going to be reacting to this confluence around the key level and that ascending trend line to decide if we are going to be buying or selling. Now, scaling down into the 1 hour time frame, our execution time frame, this is what I was able to come up with. Now, so far this week, the market has been a little bit choppy, and in fact, it has been caught within a range bound structure where price action in the last 8 to 10 hours now has been confined within the 151.050 level and the 151.430 level. Sorry about this. So 151.430. So 151.430. So we do want to be marking out these levels on our chart. So we have a range bound structure already, which emphasizes the prevailing uncertainty going on at this particular point in time. And as it is right now, you know how we treat our range bound structure. We do want to be exercising patience, waiting for either the breakout of the resistant line of that range to give us an opportunity to buy, or the breakdown of the support line of that range to give us an opportunity to sell. So it's a simple trading setup we have here on the USDJPY. Let's exercise patience and wait for this structure to mature. So this is my simple view on the USDJPY. I encourage you to mark out this level and let's exercise patience to see where the breakout is going to be happening. So this is my view here. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 5-10 seconds off to see if there are any questions before I move into my final asset for this week. So stay tuned in, guys, and do not forget to click on that like button if you have found this content helpful and useful in making your independent trading decision. I'll really appreciate your support by giving the video a thumbs up. And for those of you who are already liked the video, thank you very much. You guys are just too wonderful. So let's see if there are going to be any questions before we move on to the final asset on our watch list for today. Okay, so in the absence of no questions, let's take this as a confirmation that we are all on the same page. So in that regard, let's move into the final asset on our watch list for today. Stay tuned. So the final asset we are going to be looking at today is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And on this particular asset, we were able to make in over 1,500 pips from last week's surge following the FOMC announcement, and of course we also took advantage of the rebound in the US dollar after price action tested that all-time high at the $2,180 ish. And once again, I would like to congratulate everyone who was part of the profitable journey last week. So during the course of the weekend, I shared my idea on this asset to as regards to the upcoming week, that is this week. And for those of you who had missed out on that video, you can check the links right in the description box of this current video to have a look into the background knowledge that brought us to this point we are seeing on this chart. So since I already shared the video on the XAUUSD, I will just go straight into the 1 hour time frame to project what my plans are, at least for today's trading session. And for those of you who are with me on both my TradingView and Telegram platform, you must have gotten an update as to this asset. So this week we've seen that price action has been confined within a range after about 8 to 10 hours, as you will see, confined within the $2,178.50 level and the $2,164.50 level to emphasize the prevailing uncertainty in this market. However, it is important to note that the week started on a bullish note, and in fact we had an engulfing bullish candle in that regard, as you will see right here. Of course, so it was a very strong bullish momentum at the beginning of the week, and in fact this could be attributed to the weakening US dollar, which was influenced by the dovish sentiment surrounding the Federal Reserve stance on the trajectory of interest rates for this year. And in line with this development, market sentiment is leaning towards the anticipation of interest rate cuts as early as the June's monetary policy meeting. Now, recent statements from Fed policymakers indicates that their continued commitment to reduce interest rate by 3/4, that is 75 basis point for this year. So that's 0.25, 0.25, 0.25. So we're expecting 3 rate cuts this year, which is not really an hawkish remark at all. And I'm of the opinion that the path of least resistance for gold prices is looking to the upside due to this reason. And there are other couple of factors as well which could be influencing the ascent of gold. That is the geopolitical tensions in the Middle East, which is still ongoing. And during this kind of era where the tension is high, the appeal for safe haven assets such as gold is always a popular thing during this time. So this is one of the factors that could limit the downside of the XAUUSD. Now, as this market is right now, and looking forward to what will be happening during the later part of the week. Remember, we are looking forward to the gross domestic product annualized for Q4, which is coming up, I think, on Wednesday, and then we are looking forward to the core PCE, that is consumer price index, which will be which is considered to be an inflationary gauge data that will be further guiding the Federal Reserve's policymakers on their interest rate decisions for this year. So I still think that market participants, major key players in the market, will want to step aside, waiting for this event to for the announcement of this event before making any investment decisions. So in that regard, we may likely see an extended sideways trading activity for this week, where market will get caught up in a range bound structure during the first 2-3 days of the week before making a decision prior to that event or even after this event. So we want to keep it in mind that if this is going to be the case, we want to ensure that we move our stop losses accordingly as soon as price move reasonably well in our direction. So with that being said, here we may likely see price do a range bound structure for a while before it finally takes a decision. But in that regard, we will be using this range bound structure as our yardstick, where we shall be looking out for buying opportunities only at the breakout of the resistant line of that range, and of course look out for selling opportunities at the breakdown retest, please breakdown retest of the structure to jump into a bearish move. Now if we are likely going to be seeing buying opportunity before the breakout of the resistant line happens, I will surely give you updates on both my TradingView and Telegram platform. So our center of focus for trading activities today remains within the $2,178.50 level and the $2,164.50 area, where depending on the direction of the breakout will give us an idea of where price is likely going, at least for the first half of this week. So it's a simple setup. This is my view on the XAUUSD. So I encourage us to mark these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions. And I think it's on this note we have come to the end of the session. But before I do that, before I round off, I would like to know if there are any questions whatsoever. And at this juncture, we have about how many likes right now? We have about 7 likes, so we still have about 3 people who are yet to click on that like button. It doesn't cost you anything. Just click on the like button. This is one of the cheapest way you can actually support this channel and this community in growing. And thank you very much as you do so. For those who are click on the like button, thank you very much as well. So while I'm looking at the comment section, I'm yet to see any questions or inquiries. So I think it's on this note we have come to the end of today's Forex Morning Mastery session. In fact, it has been a wonderful moment with you guys, as I really enjoyed every single moment with you. And let's see if we can replicate what we did last week, and let's hopefully see how this current setup we have is going to guide our decision. So we were able to attend to 3 financial assets today and for this week, which includes the USOILSPOT, the USDJPY, and of course the XAUUSD, all of which we were able to identify simple trading setups that we will be using to strategically position ourselves for the next move. And I do hope you marked out these levels and structures we illustrated during the course of the session. If you had done so, well done to you, kudos to you. So all we need to do now is exercise patience and allow these structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you do want to be having a well-defined risk management strategy in place to protect your portfolio. For those of you who joined us for the first time today, I do hope you were able to get 1 or 2 things from what we discussed here, and if you did, you want to be part of our subsequent editions. So I look forward to seeing more of you same time on Wednesday, 8:05 a.m. UTC, 9:05 a.m. West African time, as we come here again to review how well these assets have been doing. And of course, Wednesday's session promises to be an exciting one, as everyone in the market will be looking forward to the GDP data, which obviously will be bringing some positive traction into the market, and we do want to be on standby to capitalize on that opportunity. So don't miss out on that session. Mark it out on your calendars, and let's see on Wednesday's session again. So it's on this note I've come to the end of today's Forex Morning Mastery session, and I all wish you all the best of luck. I will continue to see you in the comment section of both my TradingView and Telegram platform as we continue to monitor price action. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye. Bye.